Hello and welcome to Investing Confidential in the last few days of 2022. I know I talk macro and stocks and bonds, financial assets a lot, but I'm going to talk. I'm going to have the final talk about housing for 2020. I've been talking about housing. I've done a few videos on it. What a disaster it has been. And I just want to talk about why housing really matters to the economy, and it's going to really affect the stock market. And if you're investing in stocks, you better really understand what's going on in this housing collapse because it has massive economic effects and will affect your bonds and will affect your stocks going forward. All right, so let's talk about this housing collapse. First of all, I think 2023 is going to be another rough year for housing and actually beyond. I think as I spoke about before, pricing takes a long time to filter in. People bring up their prices really fast, but it takes years for them to bring down prices. And let me start with the evidence of why I think it's really going to affect the economics and why housing is going lower. First of all, the number one thing is do not believe this false narrative about mortgage rates. I mean, give me a break. Mortgage rates are high, and obviously they are going to contribute to the future. But the reason that we bubbled and the reason that we're crashing has nothing to do with mortgage rates per se. Has to do with the normalizing of interest rates. And it's not individuals who are going to cause this collapse or have caused the bubble. It's institutions. It's people or institutions like BlackRock, et cetera, who came into this market over 10 years and obviously accelerated over the last few years, created this bubble with financial engineering, buying assets because rates were going to zero or rates were zero. They were buying these assets, renting things out, making 7, 8, 9% returns, leveraging it up, giving their investors 15, 20%. Everyone was happy at the expense of the American dream, right? Driving real estate prices up to ridiculous levels and thought it was going to go on forever. They thought this party of zero rates were going to go on forever, but false. No, ain't going to happen. Too much inflation, rates are normalizing, and now people are going to suffer. And they're going to, not people, but institutions are going to suffer. And they're going to suffer badly because there's no bailout coming this time. In 2008, the government bailed out the real estate market through tons of liquidity. They tried their best. And they bailed out the banks, obviously, but they really injected a lot of liquidity to bail out the real estate crisis. This time, there's going to be no support. Okay, because the economy, the damage to the economy is coming from everywhere. So to support institutions, which they did the last time, they can't do it this time. So there's going to be no financial support. It's going to be a steady decline, and these institutions who really came in and bastardized the real estate environment are going to suffer. Okay, let's first look at in the reasons why. So let's look at inventory. Okay, National Association of Realtors. By the way, these guys hide data. They don't want you to see the real data because they're realtors, right? They benefit from transactions. They benefit from real estate going up forever. So so when they show you real data, it's real data. Okay, but they can't hide the reality that inventories are climbing very fast. Okay, as you can see here, they're going to explode. Okay, when these institutions again who own the delta, where all the real estate inventory is, it's owned by institutions. Don't buy this other false narrative that's out there. They're going to puke soon. Okay, Rich, you just look at Open Door Technology. Stock's $1. It was $28 or $45 when Wall Street was all excited about their strategy of buying thousands of homes sight unseen and renting them out to unsuspecting consumers. Okay, everyone loved the stock. Boom, they're gone. They're out of business, and they have to puke out their inventory. So does Blackstone. They're going to be puking this out, and prices will come down. Okay, pending home sale. This is obviously signed real estate contracts. They're falling. Pending home sales are falling to record lows, okay? And they continue to fall to record lows. Here's Redfin, who obviously doesn't want you to see real data, but they have real data. Pending sales are down over 30%. They're going to tumble much further. You're going to see all-time record lows for pending sales before this decline is over. It's a nightmare for realtors, okay? National Association of Realtor, again, talking about pending home sales. Why am I showing this? To show you that it's happening all over the country. Look at these numbers. It's not just, middle America. It's happening in the Northeast. It's happening in the Southeast. If you're in New York, Miami, San Francisco, Los Angeles, you're about to really feel the pain, and you're feeling it now. Okay, next year is going to be a disaster for these high end places like Miami, which benefited from all the crypto dudes, and New York and by the way, the Hamptons has already collapsed. There's no bids, so we're going to see it all over the country, and you're seeing it already. Now we talk about, existing home sales. Okay, these are, real sales. Okay, down 4% in November, the 6 consecutive months. I mean, when you see it in chart form, it's the worst in history, folks. Worst in 2008. So if anyone tells you that it's not as bad, it is bad. It's worse. Okay, and that means the economy is going to suffer even worse. We had a massive recession in 2009, 2009. It's going to be worse this time around. Look at this U.S. Housing prices, sales. Now, this is interesting here because this is a diffusion index, and what a diffusion index is, it measures turning points. Okay, it takes a lot of data, aggregates a lot of data to determine a trend, and what you're seeing now is an absolute collapse. That is the trend. Okay, forget about everything else. This diffusion index tells it all. We're seeing an absolute collapse. This is a nuclear winter, right? We see here housing. These are charts from other people. It's a nuclear winter out there, folks, and it ain't going to get any better. Okay, Blackstone, Open Door. These guys are going to be puking out their inventory now. They already probably doing it slowly. They're going to be doing it full sale next year, and it's going to add pressure to prices. So this diffusion index will continue to be at these lower levels, pointing to a trend of lower and lower prices, and a disaster for the real estate market in terms of for the institutional, the realtors, the investors. Okay, let's talk about now the economic impact. Okay, it's all about the consumer. So look, okay, now we factor in the mortgage rates. Mortgage rates are higher. They've gone through the roof. They're 7%. They may stay at these levels for quite some time. And it's going to have an effect on the consumer. Okay. On the average consumer is going to be depressed because if you own a house, the price is going to be down 30, 40%. Oh my God, I can't refinance, I can't sell, whatever. And you're going to see it in consumer confidence. University of Michigan, one of the only few data that's reliable out there. It's the lowest on record. It's going lower. Okay. Uh, Look at housing affordability. Okay. We're looking at a new low in terms of affordability, mortgage rates to income. People can't afford to buy a house right now because of the mortgage rates. Okay. It's unbelievable. So that's going to contribute to continued prices going down. And why it will go lower and why it's going to take many years to recover. So it's not going to be a fast recovery like we see in stocks once in a while. It's going to be many years. And one of the reasons is the banks still only lending to people with high FICO scores. Okay. The previous last few years, you had some lending going on in the mortgage. It's been alternative lenders, but the large banks are only lending to people with high FICO scores because they got burned in 2008. That's going to contribute to the slowness of the recovery. These institutions, okay, these are bad guys, folks. Okay, they want you to be Russian serfs. They want you to own nothing and be happy, like that moron Klaus Schwab said in the World Economic Forum. They want to build, they want to buy the houses, they want to rent them to you. They want to build houses and rent. That's the way they make money. Okay, and obviously they need leverage to do that, and this is why they're blowing up because how rates are normalizing. They can't borrow at zero anymore. They got to borrow at much higher rates, and the economics don't make sense from a rental standpoint because obviously rents are going down. So again, I'll talk about rents, but remember this: that these people, when they go down, they're not your friends, and you're going to benefit from it. So there's been a false narrative out there about renting, that you have to rent. Again, going back to this, this Russian serf, Klaus Schwab. You should rent. Don't own anything. You don't need to. Bull crap. Okay. The problem is that rents are also falling. Okay. Why? Because these institutions, look at this. The institutions are the ones that finance apartment construction. Apartments under construction, rentals under construction are skyrocketing because they think you are going to rent forever. They think you're never going to want to own a house. You can't afford to own a house, which is obviously, as I told you, it's false. Rents, they think rents are going higher for longer. That's also a false negative because actually here, show you, rents are falling. Okay, they're falling. So don't believe it. It's coming down. This is all good for the consumer over time. Okay. And it's all about the economy, right? So let's go back to what I said in the beginning. This is all going to affect the economy. Don't believe the newspapers and the media and realtors. Believe your own eyes. See it with your own eyes. You know, go talk to people who are trying to sell their houses and they have no bids. Okay. Areas like if you live in New York area like I do, you're seeing high rents. It's also a false narrative. Again, these rents are going to come down. Prices are already coming down. So don't believe this fake playbook. Okay, they use the fake playbook with used cars. They use the fake playbook with new cars. It's all imploded. Okay, it's all imploded. So again, just have patience. Okay, people need to have patience. But in the end, as I told you, this is all good news for the consumer. There are better times ahead for everyone, folks. Okay, real estate is going to become for first time home buyers are going to become affordable again. Okay, stay in cash if you want to. If you're in position to buy a home, just stay in cash. Just have your nest egg in cash. Wait for the puke. You're going to see it. Wait for the signs. Wait for the news media to say, "Oh, housing prices are crashing. This is bad." When they all jump on this bandwagon and tell you how bad things are, like I'm telling you today, or others have told you months ago, like I have, that's the time you want to buy. Okay, that's when you got to buy. But unfortunately, again, this has implications for the economy and the stock market. The stock market implications are not good. Conditions are still bearish. Okay, if you want to be involved in the stock market, you have to be a stock picker. You got to look for domestic companies that are defensive in nature, that can survive this, recession and coming deeper recession. And if you find those companies, you're going to make money. And then when we come out of it, which is, down the road, you're going to make a lot of money. But again, housing, big problem for the economy. If you're an investor, stay liquid, stay defensive, buy stocks, don't buy indexes anymore. And obviously, be careful out there.